Inside the defense investing boom fueled by drones, AI, and Ukraine. Money is flowing into defense technology at a pace that would have seemed unthinkable a decade ago, and the people writing the checks are not just Pentagon program managers anymore. Individual investors, boutique venture funds, and family offices are increasingly betting on drone makers, artificial intelligence startups, and companies building weapons for a war in Ukraine that has become, whether intentionally or not, the world's most closely watched proving ground for next-generation battlefield technology. To dig into those questions, the Defense blog spoke with 4 people who each bring a different vantage point to defense investing: an independent retail investor who researches drones and space technology in his spare time, the CEO of a Swedish venture firm actively funding Ukrainian defense startups, a defense procurement expert who tracks the industry from a U.S. investor's perspective, and an early investor in Anduril Industries who agreed to share his views only on condition of anonymity, citing the sensitivities of his ongoing business relationships in the sector. The retail investor, who goes by Crispy online and describes himself simply as an individual investor and researcher covering drones, space, and defense technology in his free time rather than an industry insider, sees the market heading toward consolidation. Asked whether future market leaders will be companies building complete drone systems or those specializing in individual components like autonomy software, sensors, and electronic warfare, he pointed to a structural squeeze forming in the middle of the market. Roll-ups and components. There will be waves of consolidation and competitive pressure. Execution speed and supply chain management will be the differentiator as far defense premiums move towards commercial numbers and economics delivery, consumer, etc., said Crispy. A roll-up, in industry terms, describes the process of acquiring and merging smaller competitors into a larger combined company, a pattern that has already reshaped industries from waste management to veterinary clinics and appears increasingly likely to sweep through the fragmented drone sector as investors push for scale. Crispy also offered a framework for evaluating a defense startup before it has locked down major government contracts, pointing new investors toward established business analysis tools rather than hype-driven pitch decks. Porter's 5 forces analysis, readiness levels, technical, manufacturing, integration, etc. These are great frameworks for LLM assessments, but always validate assumptions before taking them as gospel, said Crispy. Porter's 5 forces is a business strategy framework originally developed by Harvard economist Michael Porter that evaluates a company's competitive position by examining supplier power, buyer power, the threat of new entrants, substitute products, and rivalry among existing competitors. A tool increasingly useful for sorting genuine defense innovators from companies riding investor enthusiasm without a durable competitive moat. On where the strongest long-term opportunity sits within the drone and AI market specifically, Crispy described a market splitting toward 2 extremes rather than clustering in the middle. I see it as a bit of an inverse bell curve, with neoprime players on one side offering diversified ecosystems and Tier 2 suppliers on the other. Individual drone producers may get squeezed if they fail to differentiate or move to either end, said Crispy.